All right, y'all, welcome into the second part of the Big Green Monster class. And this was suggested by one of you, actually, which said, okay, Bobby, we know how to draw them now. So what do we do with them once we have them? Now, if y'all do not have access, and I've just added access for some of you, so check your emails. If you don't have access to the first Big Green Monster class, then let me know and I'll add your email address in there. So it should send it to your email address. So some people have said that you can't click on the YouTube link to view it. You got to click on the little attachment down at the bottom of the email. And I think you have to be logged into a Google account. Now, it doesn't mean you have to have a Gmail account, right? You don't have to use your Gmail, but you do have to have a Google account open. So, if anyone's having trouble viewing that, let me know, but welcome in. So, you draw the Big Green Monster, you draw these levels, what do you do with them? Well, here's what I would do on the E-minis if I were trading this. Now, keep in mind that what I do right now, and y'all know it's subject to change, but I'm really happy with these 111s and these 112s. But I thought for some of you, we would go over some additional things that we would do. So we've drawn a fair value zone here. We've dropped the Big Green Monster. We know where fair value is, and we know that this 50% line, and it may be the 50%, the negative 50%, the 150%, whatever, but anything that's 50% with this little line here kind of acts as a magnet sometimes. Now, look on the E-minis, what is very, very interesting. You remember what I told you yesterday? Remember we had a red line down here that was our point of control line. And I told you yesterday, I said, all it's going to take is just a few contracts traded up here, and the point of control will move from here to here. Now, we've got an area that is really a magnet to price. And look how close it is. Our point of control is right on our 50% line. Now, I want y'all to start thinking, I don't want to be the teacher because I don't know everything. That may be harder for y'all, some of y'all to believe. I don't know a lot of stuff, right? And hopefully in our groups with our mods and our Muscadine Mafias and our Hello Lady members, that you and I can all kind of think about different things. But knowing that price is going to likely converge at a level that is both confirmed by our 50% line and our point of control in volume, y'all tell me the play. I want to hear what you think. What is the play? I don't want to be the only teacher. I want you guys to think. Do you have anyone waiting to get in? No, I don't see anyone here waiting to get in. And Matt, if you wouldn't mind, yeah, some sort of neutral strategy, BT, yeah, I hear that. But if you can right at pin a strike, what's something that we could do? If you go, wow, if we could actually pin a strike, what's another thing we could do? So a neutral strategy here, I agree with you. If you're right down in the middle of price, could you feel pretty confident doing a strangle? Absolutely. You could do a strangle, right? Because you could, and what is a strangle? Well, it's selling an option down here, right? Put down here, selling a call up here. Because as we look at this price, you certainly think that price could, in our probability cone would look something like this. Oh, I thought it was drawing. Probability would look something like this, right? Here's what we anticipate for the coming days. So you could do a short term or a longer term strangle. You could do a iron condor, right? Iron condor, which we would buy an option and sell an option, do an iron condor. I hate iron condors. I'm not a big fan of iron condors at that 45 to 60 days. I just don't like them at all. I'd rather do a strangle, because once you initially got into options, remember back on your progression, you found Tasty Trade. That's how many of us started. You found out about credit spreads. You thought you were going to be a millionaire in no time. Then you went, man, hey, wait a minute. I can sell the other side. If I sold a put credit spread, I could sell the call credit spread for no additional buying power. Are you kidding? That's a money maker. And then that's all you started doing. All you started doing was, credit spreads and and iron condors. But the problem is that your account started going down and down and down, right? Your net lit went down and down and down. So that was a bunch of crap. So it's just not a strategy that I particularly like. But Matt brought out something that I think has some merit. So yes, a neutral strategy, BT, is great as far as doing something that is, iron condorish or a strangle, particularly when you're slapped down in the middle of a fair value zone, where the probability cone going out in the future looks something like this. Great time to sell a strategy. Now, couple things if you're going to do strangles that the Tasty Trade way looks at is, what is the IV rank? Is it up enough to where it justifies selling premium? But a lot of times for those of us that just trade futures and just trade the S&P 500 products, I'm putting these things on regardless most of the time of what the IV rank is. But yeah, absolutely. A neutral strategy, iron condor to a strangle is definitely on this. But let's look at what young Matt has brought up. Matt has brought up something very, very interesting, and it's something called a butterfly. So if you can kind of pinpoint something, let's go over here to the E-minis, right? Let's go over here and look what a butterfly looks like. So let's go to the E-mini, since that's what we've got the green monster pulled up on. And let's look at butterfly. Now, cool thing about Tasty Trade is you have all of these different things here, right? So you got a long call butterfly. Is that what we want, or is it a long foot butterfly? Let's do a long foot butterfly. Now let's see what this thing looks like, right? So a long butterfly, what does it look like? Let's see if it can show it on the analysis tab here. Analysis curve. Yeah. So here's kind of what the butterfly looks like. It's really cool. Okay, I have Brian Silcott who can't find the link to the super. Okay, great, Rick. If you will tell him to go into, Brian is a Muscadine Mafia member. So if you will, you can either message him the link, Rick, within the thing, or he can find it in the Muscadine Mafia name. Let me see. Didn't I put it in the Muscadine Mafia name? No. Because I think we got Muscadine Mafia people in here. Yeah, tell him to go to the Muscadine Mafia chat room. And it's about 3 posts up. Here's the link for the one I posted it 12:50. Thanks, Rick. I appreciate that. All right. So we've got something called a butterfly, right? So we got a butterfly, which is selling 2 puts, right? And these particular puts are at the money. And then we're going to buy an option that is above the current price, right? So let's see, let's just make that 25 there, 25 this way, so we can pull this thing out a little bit. There. So we've created a butterfly here that is a 25 wide butterfly that has a profit tent here, which currently is at the money, right? So this is ES trading at 41.39. So where was our level, our 50% level? Let's go back over here. Our 50% line where our point of control is the 41.18. 41.18 to the 41.12. So we've got ours placed at the 41.40, right? So we could actually say, well, let's pull that down a little bit. So we'll go down closer to that 41.12, 41.18. So probably the 41.20 would probably be a good place. And then you could say, all right, we're going to go and you can make these things as wide as you want, right? So let's just go down 20 points. Let's go down to 4,100. And I've always kind of referred to butterflies as, they're kind of lottery points. Let's put this 20 points in, because you're hoping that the strike ends up at your short puts where you sold your short puts. So 41.45 on this, 41.45, 4,100, and 41. There we go. Nice little butterfly. So the cool thing about this one is you have nailed prices upward just a little bit from where you put the strike. Where would I put the strikes? Oh, Brian is waiting to get in. There he is. There's our Muscadine Mafia guy. And see, this is why I love you moderators, Rick. I mean, y'all are helping people that are in the chat while we're trying to get there. So this is awesome. So welcome in, Brian. We were missing you, buddy. We were talking about you.
Sorry for the freak show.
Yeah, I know, problem, man. We're glad you're here. So you're a mafia member, baby. You gotta get in. So what we've done, Brian, you missed just a little bit. You have the recording, but we've identified an area on our Big Green Monster on the E-minis where it just lined up beautiful, right? The 50% line slap dab in the middle of where the fair value price is lined up almost identical to where the most volume is traded. Y'all, this is what we would call a high probability trade that price is going to spend some time here. That even though it's gone up, there's a good chance we're going to come back in this area. So what we're doing is we're trying to take a very, very low probability trade, which is a butterfly, and pop it right on top of where those strikes are. So we've got it positioned, 20 wide. So we've got this nice little profit tent that gives us an opportunity to make a maximum profit of $950 with a maximum loss of $50. This is what we call an asymmetrical trade almost, right? It's where the profit on the trade is much higher than the max loss. Now, ordinarily, there is not a chance in Hades that I'm going to put this trade on. Do y'all know why? Why do I not do butterflies? Let's get the wheels running. Why do I ordinarily not do butterflies? Same reason that I don't buy lottery tickets. I don't buy lottery tickets because of this. The probability of profit is, yeah, exactly, Brian. It's a low probability trade, right? It's a probability of profit. But if I can take a low probability trade and assess to it a much higher probability that this particular event will happen, then I may spend $50, right? Max loss $50. If you're paying $1, remember this has a 50% multiple of what SPX would be. So you're not paying $100, you're paying $70 or $50 for the trade, right? 50, and with the commissions, 63.48 in order to make a maximum profit of $950. Now, let's talk about what days to expiration would we do here. So you're exactly right, BT, that a butterfly really doesn't come into play until expiration, right? You're really, if price dangles in here today, it really doesn't help us on an option. You want to make sure that you've got something that has that we're going to be here toward expiration, where this thing will actually have a chance to beef up that little profit zone. So yeah, on our Big Green Monster, does anybody remember what our Big Green Monster is kind of how many days we're kind of looking at here from our Big Green Monster class? This is a 30-minute, 10-day chart. Right? It's a 10-day chart. So I'm looking to make a trade that would be probably 10 days or less, right? 10, 15 days, may go 17 days to where we have an opportunity to do here. But I'm thinking that there's a high chance, if we look in the past, how many days has it rumbled around the 50% line? Well, this is right. This is 30 minutes over 10 days. So Monday, Friday, 3, 4, 5, 6, 7 days that price has dangled around this area, right? So I could even build a case that would say, well, maybe I could put on a trade even, 10 to 7 days in the future, thinking that there's a high probability that we might get a pop back on here. Now, cool thing about a butterfly is you don't have to have a high win rate to make money on these things as long as you hit a couple of them. So while I would not ordinarily put these trades on day after day after day after day, if you're drawing some big green monsters on things and you have an opinion that price may converge at an area where we are, fairly priced, and you've got a double kicker of, hey, wait a minute, I'm seeing a value, the high value zone right here, the high volume area. Yeah, I mean, I think that might be a shot worth taking. Any questions on that butterfly at all? And why I think the butterfly is an excellent trade to do, not on its own, but in a way where you're using the big green monster to make those trades decisions along with it. So what would I do if personally you sell a 7 DTE expected move strength? Yeah, that's fine too. Absolutely. Because what you're doing there is you're saying, hey, there's a good probability that price is going to hang within what we would call a probability cone, right? That would be between these two areas. Very, very nice. Now, let's look at that. Let's look at a 7-day. Let's look at a 7-day butterfly. Where's our days to expiration on this thing? Yeah, this is 17 days on this one, right? 17 days on this one. So it costs you 50 cents. And you could even go shorter term on it. Yeah, here we go. So you could go curve, let's see, quantity, width, strikes, time. So there's a 17-day and a 14-day. Is that showing 14? What's that saying expired? Let's go back to the table. This is in a 14-day. 14-day. What else we got strike wise here? We got 13, 12, 11, 10, 7. Let's go down to 7. Let's clear this one. And let's do a butterfly here. Long foot butterfly. And we said we were going to get the short stripes around that 41.20. Right? Right. Now, I mean, here's one that you could say, well, I'm just going to take a little shot. I'm going to pay it for that. And I probably widen that out a little bit. So if you're paying a quarter, you're actually paying what, $12. So you could go out farther, right? You can pay a little bit more, but increase that profit 10. So you can go out 20 here. Go out 20 here. Yeah. So for a $1.35 7-day trade, max profit $9.33, max loss $75, 13% probability of profit. So those changed a little bit. Let's see how it looks on the curve. Yeah, beautiful. All right, since the big green monster is measured monthly, market profile on the daily chart, can we use the big green monster on the daily chart? My thought is, since we're trading 40.65 for trade entries, would it provide an area where we know that the trade is wrong? When you think about that, since it's measured monthly, market profile on the daily chart, can we use the big green monster on the daily chart? Yeah, I think you could put the big green monster on. Yeah, since you've drawn it, right, you could change the time frame and look at it on the daily chart for sure. And remember, the big green monster, the way that we draw it is good for the entire month, right? We use it for the entire month. Yeah, I think you're fine there. You can change certainly what you want to change to. Absolutely. All right, so Brian, BT said he would sell a 7 DTE expected move strength. Okay, let's look at that. Clear order, so let's do a short strain. Let's see where the strain is. Short strain. And we're in we want to be in the 7 day, 14 days, 13 days, 7 days, 10, 7. An expected move. Now, are you talking about when you're saying expected move? Are you talking about the expected move, or are you talking about using the big green monster to make that decision? BT. So if you're using the big green monster, what you could do is what you're saying. The option chain expected move. Okay, gotcha. Well, let's look at it where our strikes are here. So you got a 42.18 here and a 4,006 there. Just look what it looks like, what kind of credit you can get. 42.18, 4,006. 42.18, 4,006. 42.18. $4,006. 4,005, right? So there is where we could put it if you wanted to do where those expected moves were, right? So you would get a credit of 2075. So your max loss, of course, is infinity and beyond. If the thing keeps going up with a max profit of 1,025, you get a probability of profit that looks really, really good at 73%. But where BT is looking at, he's looking at, so, and you can compare these things, right? To kind of say, well, okay, that gives me a little bit of room to the downside. I'm using the big green monster to kind of come up with those strikes, right? To the upside, to the downside, doing it for 7 days. With a 7-day theta decay, man, you're going to have really, really, really nice theta, right? You should get nice decay on that. It does take $10,000 worth of buying power in this particular account. Now, but the other thing that you could do is you could do the same order. You could do these in the micros, right? So in the micros, you could do that, and it would be 1/10 of the size. So you're probably looking at $100 max profit, right? And much less buying power, which should be 1/10 of the buying power. So instead of $10,000, about $1,000 on that one. But the way BT was talking about, he's saying move it to the expected move. So the expected move being that one standard deviation move that you can kind of see by that, right? Everybody see that little dotted line? That's the one standard deviation move. That would be a slightly more bullish trade, right? Doesn't bring in as much credit, takes up more buying power. And what was it, less of a max profit as well, right? If you were going to do the expected move. So there's a couple ways that you could do that, right? I think I would feel more comfortable knowing what we know and combining all the things that we know of moving that back down to that 4,005 area. And coming down to the, what was it, 42.20, 42.15 right there. I may even go up like that. So that way we got a little more profit and we got a little bit of negative deltas if we get the downward move that we're thinking. Now, what else do I look at that helps me to make these decisions? And the other thing that I would look at would be the linear regression. Right? So I go to my linear regression chart and I go, it just looks like, look at this, up move, less of an up move, down day, up move, less of an up move, down day, up move, lower volume than on the 2 down moves, second stalled up move with what? Lower, even yet lower volume, and then down move on what is going to be much higher volume than on the day move. What is this called? One of y'all called it out the other day and got it really totally correct. What is this called? It went up on higher volume, then it kind of went up a little bit more on lower volume, but it was kind of more of a doji. So we're calling this divergence, where it's going up and volume's going down. Yeah, that's divergence. But the word that I'm looking for in this particular case is dumb money, Rick. I like that, dumb money. It's exhaustion, right? It's exhaustion. What we're seeing is, and Brian is exactly right. What you're seeing is divergence in this going upward and volume going down. This is divergence. Exactly right. I think Rick is exactly right. It's dumb money. And what we're seeing is this is exhaustion. I am tired of going up. Y'all get what I'm talking about. Okay. So we've got exhaustion happening on the up move. So where would I rather place my strikes if I'm going to do a strike? I'd rather be a little bearish on it. Absolutely. But for the next 7 days, yeah, I think that's a great way to look at the trade. So, how much risk do you want to take? The risk with the butterfly is very low risk, a lower probability of profit, but an opportunity to have a lottery type return. And we think by using the science, whatever that science is, y'all. I mean, look, do I know how the big green monster works? Not exactly. But those that have been here, Wayne, Rick, Matt, Ken, that have been here forever, have seen this thing work over and over again. Brian, so an increase in volume and a narrowing price range would indicate the potential for a larger move when it comes. Yeah. So what we see with that is, and you've seen it so many times, right? And here's an instance here. So what you see here is you see price. What is it? Price has done this. Watch, it's going in these big moves, right? Then all of a sudden we get a big move up. And then what does it do? It winds up. It winds up. And we see it time and time and time again. So it's almost like a jack in the box. You got this little jack in the box. Pop goes the weasel. Right? And then you get big moves, big moves, big moves, big moves. And then you get these areas. And I'm not a technician, I don't know what I'm talking about here, but you'll see this over and over and over again, Brian. You've seen it in the past. You'll see where price starts doing this, just little bitty narrow ranges like we're having now. And then what happens? The big move comes, boom, right to the downside. So if we're thinking in terms of that, big, narrow, long type moves, and then a consolidation. If I had to guess on a move to the downside or a move, outside of the box, where am I guessing? I'm guessing it's going to be a bigger move to the downside. Just from what we've seen in the past, right? All right, so let's take something else, and let's say we've drawn a big green monster in several things in the past. So let's look and see if we can find something else, or if y'all want to bring in a new ticker that we can draw a big green monster on, we'll do that. So we've got crude oil, we got natural gas, NASDAQ, DraftKings, Gold, Netflix, all of these. Which one do y'all want to do? Oxy, man, what the crap are you talking about? You really want to do Oxy? What is Oxy? I don't even know what that is. Let's try it. Does Oxy have what is Oxy? Occidental Petroleum. Crap. All right, let's do it. Man. Is there enough volume in this thing to trade it? Let's look at Oxy. Go back to my region chart. Should have known this. See what Oxy's doing. Come here, Oxy. So 3 point. Okay, you want to do wheat as well? No, Warren likes it. Warren likes it. Hey, let's look at it. Okay, it is trading, isn't it? Look, it's 18,000 contracts for a 2-minute period. Wow. Okay, let's do it. Oxy. and then we'll do the wheat and what else do you want to do? Corn. All right, here we go. So let's go draw a big green mustard. I won't take a lot of time in doing it because that was in the first class. Y'all should have it by now. So obviously, so let's go to our clean chart. See if we can figure out a trade for this. Oxy. OXY. I said OXY. Warren must be spending a lot of time here. So this looks like this is August. And this looks like this is July. The high is 66.05. 05. And the low is 55.91. Oh, so close. Let's see what this is. Let's go get another little toe. Draw from the 50 to the middle. Oh, Bob. With steady hands. We're going to take it up to the 100. Hello. Right. So then we're going to move our 0 line to our 200. 0 to our 200. And we got to sit this little puppy right on the beginning where we started drawing the extension. Hit the escape key. Let's get rid of this puppy. Move. Make it green, baby. This is July to August. And make it green. Yeah. All right, let's go back to our volume profile, see what this thing looks like. See what Warren's seeing that we don't see. If Warren's on something. Brian says, I really need to get up to speed on Thinkorswim. I use mostly TW and CQG. What's the name for the family grain operation? You've got a family grain operation and you are in the Muscadine Mafia too? Unbelievable. I ain't messing with Brian, baby. Kidding me? He's milking the grains. I like that. All right, so look at this, y'all. This awesome little chart. Wow. What do we got here? All right, so this is kind of cool that we're seeing, support and resistance lines drawn here, right? So we are fairly priced, fairly priced. So we're in a fairly priced zone. Got a lot of little areas right here that could possibly be filled. And we're never shocked to see a move to the point of control. Never shocked to see. So let's see what it looks like on the downside. How much rain we got to move here. Look at this, y'all. So the 50% line served as a little bit of support on that day, but then it just blew off. This must be the day that Warren said, I'm in, baby. He had had enough. I'm coming in, and then we knocked our head up against this area. So we've got kind of a ceiling on us right here, right? I mean, it's a paper ceiling for us, but we're seeing this line offer us a little bit of resistance, heading into the upside. So what trade do you see here? Anybody just see something? We just hide the bodies in our field. That's how we get such good yields. Absolutely, baby. That's fertilizer. Beth told me the other day, she says, Bobby, stop talking about Mars Hill and all the bodies in the well. I said, Beth, there's bodies all in there. If anybody goes missing, everybody knows where to go. They're in Mars Hill. She says, but people gonna think you put the bodies there. I said, I didn't have anything to do with most of them, Beth. They can't pin me on any of them. So, you know, God, Beth's worried I'm gonna get called out for bodies in the way. So anybody seeing a trade? Wait for the confirmation breakout. No trade for me right now. Exactly. I don't see a trade. I don't see a trade now. Look at what they're finding in the lakes outside of Vegas. Oh yeah, they're drying up. There's bodies all in there. Of course there's bodies in there. The world we live in. All right, so it's like I was telling my personal trainer the other day. I said, shit, her boss was giving her problems or something. I said, you need me to take care of it? She says, ha ha ha. I said, what are you laughing? And she's like, she got all serious. What are you talking about? That's what we do. Take care of it. All right, so yeah, I don't see anything, right, until we have some type of a breakout, you know, and maybe, you know, some indication that we would get in even this area. I wouldn't even trade in this area because this would be an overbought condition for the area below. I just don't see a trade. I don't see a clear trade. So, you know, I mean, do what you want, but there's no clear trade. All right, what were y'all wanting to? Y'all wanted to do wheat. Let's do wheat. Since we got bodies in the wheat field. You should trade wheat all the time. I had done this forever. This all wheat field. Let's see if I have a big green ZW. Yeah, we got wheat, baby. Wheat. Let's see if we got a trade. I see it. Let's see if we got. See if I got a big green monster. That's my wheat ain't showing. Ah, there we go. All right, so we got July for August. Let's draw it from the bottom to the top. It's grounder. Who trades wheat besides me? Ken trades wheat. How about that? Ken. I used to do it all the time. What I used to do, y'all, is 10 Delta Strangles. Yeah, and all the commodities and the euro and pound. And I do them, you know, about 90 to 150 days out in time. I really like to go farther out. So this high, the low is 754. Look at Brian. I don't even know what KE is. What is that? So 754. And the high is 811.75. 811.75. What about the money? 811. That's July. 754. No. High 940.25. 940.25. There we go. All righty then. This is strange. Here, we'll draw from our 50 to the middle of our green. Get in the middle bar. And then go down to 100. What did I do? My crap go. Hold on a second, Joe. Let me get it back. ZW. Let me change my thing. That's what I'll do. Let me go to oil. Crude oil. Plain chart. Come here, oil. That oil. Let's go back to our fleet. ZW. Well, crap, that was going to be good until I lost my. Where's my numbers? What there we go. Jeez Louise. What's happening? Here we go. Got it back. No. I'll need my hand. I'll tell I'm rusty. All right, so now we gotta take our 100 and turn 200. Let's do that. Activate. Draw 100 and 200. Beautiful. And we'll rest our 0 right on top. Little bitty thing there. And beautiful. All right, so now we gotta get rid of this puppy. Right click and move. Right click and property. And let's choose August. And make it green. All right. Now let's go check it. In the volume profile, we got it drawn. Now let's see if we can see a trade here. It sounds like people that live around me. We got a JW and a BW and a Bobby, all kind of names. We got a lot of people with names. I don't think it's sweet. Yep. Ah, look at this. This is kind of cool, right? On wheat. Wheat is fairly priced, y'all. Wheat is fairly priced. So wheat being fairly priced, we are also at the point of control where volume has traded the most. Now, interestingly enough, we do see some gaps, right? We see some gaps, and we see that we have a lower value here, the lower value area high, value area low, which basically is a standard deviation above, standard deviation below in relations to volume. So what's the trade here? What if anyone were going to take something here, what would you do here? PC before strangle. Okay, Brian says a strangle, so he's saying a strangle. I could definitely see a strangle. Why could I see a strangle? Because we're basically flat in the middle of the fair value zone, right? I could see a strangle. What else can I see? For those of you that don't want to take the risk of a strangle and you want the lottery play, what's the lottery play? Where's Matt at? Matt, you ain't out driving, looking at people's meters today or nothing. Really. What's the lottery play? A butterfly. Exactly. All right, Larry, you are the guinea pig for the day. Larry, where would you put your butterfly? Where would you try to put your strike? If you're looking for like a 7-day play, 3-day play, 5-day play, 10-day play. No, Brian, you're not way off. You're fine with a strangle. I think you're fine with strangle because you're in the middle of the fair value zone. You certainly do, man. Do a iron condor if that's your thing. But center on the 780. Okay. I could see a case for maybe doing something on the center on the 780, but I could also see a case for doing it on the one standard deviation below the point of control, which would be the 765 or the 60 area right here, right? 762, 765, 760. Center this puppy in on that, thinking that these gaps may fill, right? We haven't tested those really, and that there's a good probability we're going to go back to 50%. That's where I personally would put in butterfly. Now, the other thing that I would do is I would probably consult with our old friend, the linear regression channel, see if we could get some indication of what it looks like over here. Let's see if I can do that. CW. If I pull up wheat. Instead, we're going to pull up ZW and just look at linear regression to give me some idea of whether I'd rather go at 780 or that wheat futures. All right. So let's see what the wheat futures shows us here. That's interesting. And we're clearly in some type of downward overall trend. We're toward the bottom. I don't think this really helps me any as far as trying to figure out if we're going to go down or up. But let's see, we're in the downward part. I mean, we're always looking probably to head back upward this way. This is probably more neutral to bullish here. Let's see what happened on this recent down move. What happened with volume? Okay, so volume increases. Well, it didn't on this one, right? But it started to decrease, then got a little more steam, got a little more steam, took a break. So here we are now with another red candle. So this was certainly a move with some bit of momentum, right? Green candle lower, and we're going back to that. Really not picking up much there. How about on the 752 low? Seasonality says price should drift lower with some fits to the upside. The post-harvest sell-off from the ZW going to market this month. Look at you, Brian. You don't know about this sweet stuff. 752. See where 752 is. Yeah, the 752 low. Yeah, I mean, you certainly could try something there, right around the 750 or so. Yeah, I mean, if I'm looking at this though, I'm thinking that probably if we're looking at a short-term trade, 7-10 days, that this thing is probably a little more neutral to bearish. And if I had to put in something to be looking for a butterfly trade, then I'm definitely going around here, and I'm definitely going to the downside. I'm not going to put here. I got two things at play here, right? And that's what I'm really trying to figure out things is if we're not in the middle of one of these things, then I try to go, hey man, let's go to where I can see two things lining up. So the fact that I have a value area low here on top of my 50% line gives me a little more confidence to go here rather than there. All right, let's look at a couple of things that we've already drawn as we kind of wind down our session before our entire group gets in. We do our trading session for the day. Let's look at natural gas real quick, like some of these that we've already got drawn, so we don't have to draw any more new green monsters. Come on, natural gas. Okay, natural gas. Look at this. Look at these. So it takes me a while, right? Probably like y'all, just takes you a minute, just kind of look at it, just kind of see where things are at. So we've got a fair value zone above, big fair value zone. Look at that. Fair value zone above. So we are at a point of being oversold for the condition above. So we're at the point of control. We do have some gaps to fill. So being oversold, you would anticipate, though it looks like in this area, we've had a struggle here. We've had a struggle here. We've had resistance here. And now we're just kind of bopping the top of the resistance here as it tries to make a decision. Do you want to remain oversold? Do you want to go into this area below? Or do you want to go back into a fair value zone? Who sees a trade here? You want to see a trade here? And again, the other thing that I'm going to do is I'm going to go back over to our old friend, linear regression channel. See if we can put in NG. Natural gas futures. So we're kind of in an upward trend, right? It's not a big upward trend, but this, looking at this, we're going up, coming down here. Yeah, it's kind of neutral to, I would give it a little bit of a bullish lean, right? Because the overall trend has kind of been upward of such. So if I had to make a trade over here, I'm probably going to go a little bit on the bullish side. And I'm getting confirmation of that. Yeah, a bullish butterfly, but you wait for confirmation. You could do a broken wing butterfly, certainly. But if I were going to do anything here, I may do a put credit spread, right? Selling a little bit of premium, thinking that we're going to, since we're oversold, go back into the fair value zone here. Plus, the overall trend, looking at our linear regression, is slightly bullish as well. So I don't have a high conviction trade here of anything that we do. I don't think that a butterfly is what I would do. On this trade, I would probably put in something that's a little bullish, but to find risk trade and do something that is slightly bullish, and probably defined. Why would I do a defined risk trade in natural gas? Anyone got any experience trading natural gas? Widow. Exactly. That is the one word, Brian, that I was looking at. And I mean, I used to trade, strangles in this thing all the time. Fortunately, Beth is still with me, and I'm still with Beth. So she's not a widow yet, but that certainly could change in the future if I were to trade many more strangles in natural gas. When I think I did really well in natural gas. Again, I would do these 10 delta strangles on natural gas. Now, this was before I found the big green monster. This was before I found linear regression. So I just do 10 delta strangles on everything, man. I just toss them out there 90 to 150 days, let them decay a bit. And in the vast majority of times, those work perfect. All right, let's do one more. Let's see what we got here. Maybe two more. Let's look at crude. And I love futures, y'all. Futures are just awesome to me. And I know some of y'all like individual stocks. Matt got me trading DraftKings and almost sent me to bankruptcy. But yeah, this is interesting, right? On crude oil. Look at this, y'all. We've had a fall from grace, right? So the high for this particular chart has been we've seen highs and we've seen lows, we've seen sunny days that we thought would never go. So we see a little bit of support right here. We did breach it, came back into the fair value zone, so it's fairly priced. It does certainly look like this 80% line at 87.97 is a bit of support. Look what we've got here, right? We've got a 50% line and we've got a value area low that are kind of close together. We do have gaps in volume that make a really nice, you'll see that how oftentimes we talk about these gaps will be tested, right? Gaps will be tested. All right, someone tell me a trade. Well, yeah, I think it is, right? It's 87.01 shows the low. Someone show me what the trade is. Seeing this gap, seeing the value area low, this one standard deviation below that, seeing the 50% line here. What's the play? What's the play? A BPS, which is what is a BPS? A bear put spread, a bullish put spread, right? Okay, I could see that. Yeah, bull put spread. I could certainly see that. I could certainly see you selling a put spread, anticipating that we're at the lower range of fair value zone, considering that this did indeed look to be as support. We breached the support, but soon came back into it. We're heading back down into it again. I could certainly see gaps filling as far as volume goes. And another thing that January was lower in CL. Okay, fine. Another thing that I'm seeing that you could possibly do is if you wanted to do the lottery trade, you could do short-term butterfly, right? Around this 92 area, right? 92, 92, 90, maybe 90, wherever you could find broken wing, a butterfly. Another thing you could do is a broken wing butterfly and break that lower wing, right, to kind of give it a bullish slant. Everybody know what a broken wing butterfly looks like? And God, we used to trade them all the time. Remember that? We trade them in SPX and they work fairly good. We kind of just left them. But let's put on one of those and let's see what it looks like when we break the wing. So here was let's do butterfly CL. Yes, sir, from Tasty, but I've never traded them. Okay, cool. So what we used to do is we used to do these in SPX all the time, but since we're doing CL right now, let's kind of look at CL. And let's do a long put, long put. So selling these and selling there. And then what we would normally do is we would break the bottom wing. So this is a even butterfly right where we're doing like that. This has a maximum profit of $240, a maximum loss of $10, $999 debit, $1,000 debit, and behind power efficiency. Look at this. Your probability of profit though is 2%. Not really good, right? So what we used to do is we would take the bottom leg on a foot butterfly and we break it, right? So what that does is give you a bullish trend, right? Gives you a bullish trend. And, here, max profit 380, it is still a defined loss trend, right? At $110. And what it did, and why we did that is it would increase our probability of profit as well. So it cut down on our max profit. Right, so if we were doing the, well, it didn't cut down on our max profit, but what it did is probability profit went from 240, max loss 10, but it increased the amount of max loss, of course, that you could take on the trade. But again, turned it into something bullish. So rather than, if I had my druthers on this, I would either do a bullish put credit spread or a broken wing butterfly. And I would probably put that broken wing, let's see if you try something like this. You could either do it like this, where it's bullish, or if you wanted to say, hey, I think there's a probability, let's go back to it one more time, that we're going to go up to this 92, right? Then you could move that, move your short strikes from where the current price is here up to there, and then do the same thing, just kind of split those wings. A really, really interesting trade that you can do. Let's just try that. Let's move everything in. Let's try this way. Rolling, rolling, better. Got a cheap trade when you do something like that, right? Now, look at it though, it's like, I don't know, man, 37% probability profit. And really, I don't know if there's a need to, on a broken wing butterfly, to scoot it up this much, right? Because you're going to have so much headwinds. And you got to make a big, significant move to get up there. And it's really not worth it for the additional max profit that we could get. So probably still move it back closer to where we're at here. Especially but since we broke the wing, the profit zone goes way, way, way up, regardless of how much we move. So I would not move the broken wing butterfly. Now, if you're going to do just a butterfly, right? You're going to do an even butterfly like that, then what I would do is probably move it up to where you think that price is going to go in the next few days. And you wouldn't want to do the $10 one, right? You want to spread these out a little bit. I said you'd want to spread those out a little bit. Something like that. Very, very cool. All right, any questions? So what I really wanted to show you today is this. You can take a butterfly, which is a low probability trade, and maybe using just a little bit of voodoo science, create something that has a little bit more higher probability of success. All right. Any questions, comments? It is time to start our next class. And I will post that in our Zoom link class, and I will see y'all in just a minute.